telling you that in the big momentum sell-off of the past couple of months, a lot of babies got thrown out with the bathwater. When I say babies, I mean profitable companies with real earnings growth, not just sales growth, many of which have now become darn cheap after the shellacking. I want you to take LifeLock, symbol L-O-C-K for all you home gamers. It's a company that provides identity theft protection services. Basically, you subscribe to LifeLock, and they'll continuously monitor all of your credit and identity-related events so they can alert you if they detect anything that looks like fraudulent activity. Now, LifeLock isn't a straight-up cybersecurity play, but if your identity does get stolen while you're a subscriber, they'll spend up to $1 million on lawyers and investigators in order to make it right. But this stock has been slammed over the past few months, largely because it's been viewed as part of the momentum cohort that was so loved right up until it became super hated. LifeLock tumbled from $8 to $16 last year, then rocketed to $22 in February, before tumbling back down to 14 and change right now. Company just reported 2 days ago. And even though the quarter was good, with a smaller than expected earnings loss on higher than anticipated sales that rose 31% year over year, the stock got slammed, dropping more than $1 the next day. LifeLock stock may be out of favor in the Wall Street fashion show. There were questions about the profitability of one of its business lines, but it's now trading just 22 times next year's earnings, despite having a 24% long-term growth rate. Plus, we just learned about a huge data breach last month, the Heartbleed bug, which may have compromised 17% of the Internet's secure web servers before being fixed. Normally, a story like that would send LifeLock soaring higher. Instead, it got pummeled because it's seen as being in the wrong neighborhood. So let's take a closer look with Todd Davis. He's the co-founder, chairman, CEO of LifeLock. Learn more about the quarter and his company's prospects. Mr. Davis, welcome back to Mad Money.
Thanks, Jim. Glad to be on and checking in with you again.
Absolutely, Todd. You know, I'm trying to get my arms around events that make people realize, you know what, we got to protect ourselves, and a stock market that says we got to protect ourselves from any stock that's moved up a lot. Heartbleed, if it had happened, say, 3 months before the topsy-turvy notion of buying and then selling growth stocks, what kind of pop would that have normally given you? Because you probably chart these things both in subscribers but also in the stock price.
Sure. Well, you know, we saw the 3 months before that was the Target breach that you and I even spoke about before. So what we've seen is that gives us a great tailwind for a couple of reasons. One, we're clearly the known brand with 4 to 5 times the purchase consideration of our next closest competitor. But then the fact that we have this comprehensive protection, much broader than things like credit monitoring, we typically get a good tailwind when that consumer consciousness kind of goes up. Hey, we shop at Target. Could that have been us? Hey, this Heartbleed thing looks like it's a big deal. What are we doing to protect ourselves? And when they go out and look and evaluate, what are my choices? LifeLock, we were the beneficiary in the fourth quarter. We were the beneficiary last quarter, where we saw our second highest gross enrollments of members in our company's history. So we're still seeing that tailwind, and I think you're dead on. I'm not going to win any fashion shows on Wall Street, so we're going to keep focusing on executing, taking advantage of these opportunities in the market to educate consumers and just continue this growth story.
All right, Todd, what I was wondering is, there are other companies that advertise that they protect you. For instance, my bank says that I'm protected for a certain amount of money. What is my bank not doing that you give me?
So your bank is probably doing a great job of looking at their credit card, your debit card or credit card issued from them. They're watching that transaction activity, looking at velocities and abnormalities and anomalies in an algorithm to then say, hey, Jim, we see something suspicious. The difference between what your bank's doing on that one card or what we're doing looking across your life. So I'm looking at things much broader, beyond just credit-related activities. I'm looking at things like payday loans, checking and savings accounts, wireless providers that the other folks won't see. So we know where the criminals go to try to monetize your information. So we have a much more comprehensive view of you, and we're calculating all of that in to our risk algorithms that we work with enterprises to deliver so that we can proactively reach out and say, we see this activity. Are you trying to get a new smartphone? And give you the chance to proactively say, yes, it's me, or no, it's not me, right then, to try to stop the damage before it's done on a much more comprehensive basis than something like a credit monitoring service or just what your credit card is offering you on that one card.
All right, Todd, I saw you got a giant corporate client, oil and gas. Now, why does someone do me that favor, of which I would love it if I worked for someone and they gave me LifeLock? But is that some new idea that corporations are just saying, listen, I want our people to focus on work. I don't want them to be worried about this kind of thing?
Yeah, we're seeing a couple of changes in this last quarter. One, we're seeing some great growth in this employee benefit sector. So some of the employers are at least saying to their employees, hey, we value, here's your benefit package, it's open enrollment time. Hey, do you want to get LifeLock? Check the box. Hey, do you want to get LifeLock? Yep, check the box.
Okay.
Others are even saying to their employees, look, we understand that this identity theft is scary and it harms us as an enterprise when you become a victim because you got to go out and spend all this time to clean it up. So we're going to pay for it, and that's what this large, recognized across country as one of the top companies to work for. They're more progressive. They're saying, we're actually going to buy it and give it to you as an employee benefit because we value you as an employee, and this is the best that's out there.
Well, I think that's a great testament to you, and I know so is the retention rate, which is incredibly strong. And I think that your company, look, a lot of companies moved up a lot. The stocks went up, and unless they had a big buyback and a giant dividend, they got killed. And sometimes you just have to take advantage of that opportunity and do some buying. Todd Davis, co-founder and chairman and CEO of LifeLock. Thank you so much for coming on the show again, Todd. Good to see you.
Thanks, Jim.
All right, guys, you know, when this stock would have been up big if it weren't for the kind of sell-off we had because of this recent bug. Believe me, there are going to be a lot more bugs coming around. Don't move. Lightning Round is next.